Hi, everybody. Welcome back to the Thinking Out Loud podcast. Today we have here Don Wilson, the CEO and founder of DRW. He's coming here to talk to us for a little bit. So, Don, thank you very much for joining us today, and feel free to introduce yourself.
Yeah, so I'm Don Wilson. I'm the founder and CEO of DRW, which is a proprietary trading firm. I went to University of Chicago for undergrad, and when I graduated, I went into the trading pits and gradually built DRW to what it is today. It's about 2,200 people with offices all around the world.
It's awesome. So I saw some of your interviews that you did with other journalism people, and in one of those, it caught my eye that you said you joined investing. You entered the investing world, the trading world, because you say it was the best way to uh, think outside the box and figure out problems and figure out new ways to compete against everyone else.
Well, yeah, I mean, the thing about trading is that if you build a model and you want to try it out, you get this immediate feedback
Hmm.
on, is your model working or not?
Yeah,
And that's
pretty quick.
that's a big contrast to in academia. You might write a paper, go to a conference, present your paper, argue about whether the paper's right or not. You don't really know. You may never know. Um, and so that real time feedback loop is just something that really was attractive to me.
Hmm. And is that still what interests you the most about trading, or the part about creating your team and starting your own company, that going more for the management team than being the trading pits yourself? Did that change that passion of yours, or?
Yeah, listen, I mean, there's a lot to be said for just focusing on the markets and trading and that discipline of every day trying to make decisions, figure it out, and constantly get better. Um, I mean, managing a trading firm is, adds some other skill sets, uh, but it's uh, still having those basic, kind of that basic understanding of how to trade, of how to make risk taking decisions for, is super helpful in running a firm.
Hmm. So of course, DRW is a trading firm, and you guys do a lot of market making. So it's a very automated driven environment, a lot of data, a lot of technology. But in terms of people, how do you train judgment? How do you find people that have good judgment, and how does that affect the way you build your team, especially in the upper levels?
Yeah, so that's evolving.
Mm.
When we were standing in the trading pits, it was a matter of being super competitive, being quick with math, uh, you know, being physically fit. Um, and
Physically fit was an important one.
yeah, if you're standing in the trading pit, jumping up and down, yelling and screaming, it does help.
It's there.
Uh, now it's much more about the math and being able to, I mean, of course, now with all these AI tools, being able to uh, leverage the latest tools to make trade decisions, uh, to write code, to uh, whatever it is
Mhm.
is hugely important in the process.
Yeah. And of course, you started this firm yourself. You built it from scratch, and as a behemoth in the market, how do you build a firm from scratch to being so big without losing what's, the most important parts of the culture, or uh, without making people feel like they're too small and a big machine?
Yeah, I mean, it's a constant challenge, right?
Mm.
At each step as you go to, from 50 people to 200 people to 500 people, and eventually over 2,000. Each of those increments, um, you have to think about how do you maintain the culture, how do you maintain a consistent uh, framework for talking about risk,
Mm.
um, and it's not always easy.
Mm.
But that's what we strive for.
Do you have any system to stop this huge institution to become too bureaucratic? Because of course, this is a business that, as you said, relies on quick feedback loops and really speedy decision making. So how do you stop this bureaucracy from taking over?
Yeah, I mean, I think Warren Buffett talked about the ABCs of business decline, and your B for bureaucracy.
Uh-huh.
And yeah, I mean, you have to be on the lookout for it. You have to kind of, encourage people to be entrepreneurial. At the same time, it is there are a lot of moving parts. And so you have to make sure that people are coordinating
Mhm.
properly.
And in terms of how you see markets themselves, how you building models themselves, is there something to learn about the markets in terms of how the markets work that you wouldn't be able to see without a crisis? So, of course, you went through dot-com bubble, you went through the 2008 crisis, you went through the COVID crash, you went through all these flash crashes that happened. Also, and is there any knowledge that you gain from these specific moments that you wouldn't be able to gain otherwise?
So, those, when you get those extreme moves, one way of thinking about it is that the market is now out of sample.
Mhm.
Um, you can't just like back test and kind of assume that your processes are going to continue to work when there are those dislocations in the market. So um, I'm not sure that those dislocations do help you think about risk and extremes. Um, but the bigger thing about those dislocations is that there are always super interesting opportunities,
Mhm.
and approaching the market when those dislocations take place and kind of looking at the market with a clear set of eyes is actually a huge advantage.
Mhm. So the moments themselves, they're just good opportunities to take advantage of, but not necessarily something extremely original.
Oh, I mean that each one is original. Each
Uh-huh.
one is unique. Uh, and I mean, some of the more recent ones like COVID, there was a huge dislocation in the price of gold between New York and London.
Mhm.
There was the price of crude oil went negative.
Yeah.
Uh, uh, the VIX stasis got all dislocated.
I mean, last year the VIX
So
was all over the place, right?
yeah,
Yeah.
yeah.
So how these moments evolve the way your firm trades? Is there after, for example, COVID, you just realize, oh, there's another opportunity here, and then you change the way the firm trades, or is
It's
it
really
really
more the bigger opportunity is in the moment to be able to
Mhm.
jump in, talk to the team that's a specialist in that product, and then express risk
Mhm.
around the dislocation.
Yeah. And have you ever, again, this firm is you started by yourself and something you extract from a lot of culture. It seems like. Have you ever not gone through an opportunity because it seemed that it didn't fit the culture, it didn't just going to go against some core belief of yours? Is it completely opportunistic? How do you see those?
Yeah. So, and certainly we've, not hired people who we thought were a cultural fit. I mean, that's always something you have to be very thoughtful about.
Hmm. And of course, it's really interesting because DRW really evolved over the ever since its founding, and a big thing you were really pioneer on was crypto, right? So in the mid 2010s, you saw crypto as a big opportunity, and you were one of the first big trading firms to jump on that trail wagon. So what did you see about crypto that was so interesting to get into trading in that new type of product?
Yeah. So one of the things that drives the culture at DRW is intellectual curiosity.
Mm,
So there were a number of people at DRW who were very interested in Bitcoin.
mm,
Um, and we spent a lot of time talking about, why is this interesting? Is it interesting? What's interesting about it? Um, and uh, ultimately, this idea that you could move value without an intermediary instantaneously, pretty much anywhere in the world,
mhm.
uh, I thought was super interesting. And at the time, I thought, there's some small chance that people might decide that this is an alternative store of value, a more efficient store of value than gold.
Mhm.
Um, But we also thought, these digital rails seem super interesting. And uh, if you could leverage a blockchain to move money, to move collateral, to even trade, that would be super interesting.
Mm.
And so in 2014, we said, okay, let's do a few things. We started a company called Cumberland.
Yep.
We, branded it separately because at the time, the general consensus was anybody that touches crypto is a criminal.
Trying to get away with money laundering.
Yeah, exactly. So we said, okay, let's just, distance ourselves from it a little bit. Even though, I was convinced that it was a really important technology. And so we started Cumberland. We bought some Bitcoin. We started providing liquidity in Bitcoin. And we also started a company called Digital Asset Holdings, which created the Canton Network, which is a blockchain that's focused on facilitating traditional finance on chain.
Yeah. And so there was this big stigma on going into the crypto world back then.
Oh, for sure.
So that was a huge risk you took, and obviously now thinking about it, pretty well thought out investment. But how did you go about taking on this risk, but also knowing that was the right thing to do? How did you make that judgment call?
I mean, I was just convinced that people would get over this money laundering narrative. I mean, there's a lot of money laundering that happens with cash.
Yeah.
And the ironic thing is that if you move Bitcoin, there's a record of that movement forever.
Yeah. It's actually pretty not effective, and
it's a horrible thing to use for money laundering. So, the United States government, the United States government has gotten very good at tracking things on chain and finding the bad guys. So, I just thought that was kind of a non-issue, and that ultimately the technology of the space was worth getting into.
Mm-hmm. So do you see more as a store of value, or more as a way to hedge against inflation, or just a volume of a new thing to trade in? What was
I think of Bitcoin as, I mean, to me, store of value and hedge against inflation are one and the same.
Yeah.
But that's how I think about Bitcoin. These other things, Ethereum, Solana, Canton Network, those are layer one blockchains that are trying to solve different problems, that are making it easy to move different types of assets or trade different assets, trade NFTs, trade, on-chain prediction markets, etc. Now there are, decentralized exchanges, bunch of perps trading, perpetual futures contracts. So
interesting.
Yeah.
And of course, you started in the pits, like trading, as you said. You needed to be physical to trade because you were standing up at the same place, jumping up and down for hours. And now we're in an environment where you can just sit at your desk and trade from there. Do you think this huge change in the way people interact with markets, from the madness of going to the pits to the calmness of today's trading, do you think this is a similar change brought in by crypto in the way we interact with markets, or you think is a lesser important?
No, I mean, I think that move from pit to electronic is really that's kind of the crucial transition. Crypto was never open outcry, although actually, early on, there were a lot of people who were exchanging Bitcoin for cash, meeting at Gatwick Airport to buy Bitcoin from somebody that flew in from Spain. So there was some physical trading going on there.
But in terms of the magnitude of the change, do you think as crypto gets more institutionalized and as people start accepting more crypto transactions, do you think we're about to see a massive change in the way that the financial markets work? Because, as you said, Canton is tokenizing a lot of securities, and as we were talking about earlier, the London Stock Exchange is also working on something similar. Do you think we're bound to have a big transformation in trading again in the next 3 to 5 years?
Yeah, I think that this is a big, that this is another big bang. That once you put treasuries and cash and equities on chain, it it enables you to settle in a more flexible manner. It also, as an asset owner, let's say you own a stock that's hard to borrow, I think you'll be able to take your stock and lend it out in a decentralized lending protocol. So a lot of the value will then accrue to the asset owner. Um, that's a uh, that's a really big change. I think that the collateral characteristics of these things will improve.
Hmm. And as you see crypto institutionalizing, you had, of course, the Genius Act coming a few months ago, and you see a big change uh, in the way firms like yours have an edge in crypto as becomes more mainstream, or how do you see this market getting overcrowded in the next few years?
Yeah, I mean, so now the banks are coming into the space.
Have ETFs all over the place, right?
Yeah, I mean, the ETFs were kind of the first institutionalization of this of the space, but now a lot of these banks are working on providing crypto assets to their high net worth clients, and in some cases we partner with them to provide that liquidity, the white label liquidity. That's something that we're very well set up to do.
Mhm.
Uh, so yeah, I mean, it's going to be a constant evolution.
Mm, that's amazing. Yeah. And we talked about in the beginning, crypto used to be this place where people want to do money laundering. They were going to go to crypto, or at least that was the vision. That was the perception people had on it, and it was a very wild west, no regulations. People just were doing it based off of trust into the blockchain itself, but there were no government regulations supervising it. So do you think as government regulations kicks in to make this market more secure, make this market more accessible, do you think the appeal of crypto is going to go down, or the philosophy that's still a really great project to set people free from financial institutions? Do you think that's still going to hold on?
Well, I think there are evolving visions of all that, and
Mhm.
right now the Clarity Act is being debated in Congress.
Yeah.
Or market structure bill. And
And what's that going to do exactly?
well, it's going to define a bunch of rules around the space.
Mhm.
As you said, there were that many rules. Still, kind of the existing rules still applied.
Mhm.
You still have to pay taxes on your gains. I'm sure there are lots of people in crypto who didn't pay taxes on their gains, but you're supposed to. We certainly did. Uh, there's still this vision, kind of cyberpunk vision of permissionless uh, and uh, kind of take control back from the banks. That
Mhm.
was more so than the money laundering. That was, I think, the initial ethos of Ethereum.
Mhm.
And so there are a lot of people who are like, okay, this Canton network thing is like not consistent with the ethos that we set out to build in the space.
Mhm.
Our view is that
Because
because it's connected to all the institutions.
That's right.
Now, our view is that actually that's the most robust way of doing this, of
Mhm.
achieving this dream. Now, maybe equities aren't going to be traded in a completely decentralized, permissionless manner, but
Mhm.
um, can you make significant strides in giving financial freedom to people using a more regulated environment and operating on top of like the Canton network? Absolutely.
Mhm. And so you said the Clarity Act is a new big step forward. Is that uh, what else do you need? Do you think is going to need to happen for crypto to become even more mainstream in the next few years?
Yeah, and so to be clear, I mean, it's being debated, right?
Uh,
Right now, there's a big argument going on. Coinbase just came out and said that they don't support the current version of it, and there's some chance that it never gets passed. But I mean, one way or another, this stuff is going to march forward with or without the Clarity Act.
Yeah.
I mean, DTCC which is the essentially the clearinghouse that deals with most U.S. equities, municipal bonds, corporate bonds, and a lot of treasuries. They have announced they're integrating with the Canton network, so all of those assets are also eligible to go on chain, and that's gonna. I mean, there needs to be a bunch of plumbing built around that, but that's going to open up a whole host of possibilities, and that's going to happen regardless of Clarity Act.
So now there's an institutional backing for equities to be traded in inside the blockchain. Is that
So
interesting?
how much of it gets traded versus settled remains to be seen, because obviously you could trade it in a centralized exchange and then settle it on a blockchain, or you could trade it on a blockchain and settle it on a blockchain. Either one is possible. We'll see kind of what the market adopts.
Yeah. And in terms of, we talked about crypto regulation, but just in terms of financial regulation, and is a more broader concept. What do you think the U.S. should pursue to make the U.S. financial system globally competitive for the next few decades without really sacrificing its stability?
Yeah, I mean, secure. I think the most important thing is to get the deficit under control, and that's something that Treasury Secretary Bassett talks a lot about. Getting it down to a small enough percentage of GDP that.
I mean, I heard this year we had a smaller deficit this year compared to last year, which is, I mean, sign is still not perfect, of course.
Still need to there's still more work to do.
A lot more work, yeah.
So I think that's the number one thing. I mean, now there are all these reports of fraud in the healthcare system, etc. So hopefully that can be discovered and rooted out. That could go a long way to solve that problem. So to me, that's kind of the most important thing. But the other thing that this administration is focused on is making the dollar very useful all around the world. So their stablecoin policy, the Genius Act, which has passed, is an important step towards that.
What does the Genius Act achieve specifically?
So the Genius Act sets some rules around what you need to do in order to be a stablecoin issuer for payment stablecoins. So these are essentially dollars on chain, and the U.S. administration's embrace of stablecoins is going to make other country. Well, it's going to make the dollar very accessible, and you already see that with Tether, which is heavily used mostly outside of the U.S. And then I think they have $180 billion outstanding. So that's a lot of dollars that people have bought on chain.
Yeah.
And it also puts like Europe under pressure, right? Europe was not a big fan of stablecoins.
Yeah.
But they're kind of being forced to be more permissive than they otherwise would have been because of the U.S. administration's approach.
Oh, Europe is going super slow in any type of deregulation for us, and actually, from what I've known, I think they're going the other way in terms of increasing the difficulty in financial regulation. But you talked about the dollar, which is, I think, a really important point. And Trump has made a point to try to weaken the dollar and try to in an effort to make U.S. exports more cheaper abroad. So how does this change in dollar policy affect the markets and affect trading and affect the U.S. economy?
I mean, I don't think that Trump has stated explicitly that he wants a weaker dollar.
Or maybe not explicitly, but if his goal is to make the gap between exports and imports narrower, one thing that he can do, which he, if intentionally or not, he has done, which is drop the dollar, right?
Yeah, I mean, I think the bigger thing that he focused on there was implementing tariffs.
Yeah. Sure.
which, also is quite effective.
It's true, but the dollar has dropped in
The
value.
dollar
Has last year.
Yeah.
So intentionally or not, the dollar has dropped in value, and there's a big concern going around. That was bigger a few months ago, but still prevalent that the U.S. dollar has maybe the U.S. dollar stays as a reserve currency may be counted.
Yeah.
And
I don't buy that. People in Europe are saying that. What, are you going to buy the euro instead? Like, that's a joke.
like yen or
Yen, really? So I think the dollar is probably the least bad fiat currency. I don't think that we're at any risk of it losing its reserve status right now.
And in terms of you said tying stable coins into dollar, you think that's going to make it more stronger over time? Do you think that's a big thing in playing that geopolitical role? Or
It will certainly drive demand for U.S. debt. And yeah, so I think that adds to the dollar's kind of strength as a reserve currency.
Yeah, and another thing that obviously it's been talked about all over this weekend, all of this past week, was Trump's the DOJ's attack on Jerome Powell, and the question of Fed independence, which of course Powell is going to be replaced in a few months, and there's a vision that Trump is going to implement someone who's more loyal to the administration in that position, which may cause the Fed to be more lenient towards policy than actual financial decisions. So how do you see this battle over the Fed going in the future, and how do you see that affecting the dollar and the markets?
Yeah, listen, if the Fed is too accommodative, then of course that will cause the dollar to decline, and it does risk inflation. I was surprised that the DOJ, came after Powell for the. That's right. I'm not sure how that helps the administration, but hey, Trump's doing a lot all at once, and so that's kind of how he operates.
Yeah, that's a big shift, because it was it wasn't really common for a president to challenge a Fed official that in such a manner.
Yeah, this is uniquely Trump. Yeah, I think historically, the prevailing wisdom has been that this is a bad thing to do. I kind of think it's a bad thing to do, but Trump enjoys doing that, and so we'll see how it all shakes out.
And in terms of, we talked about how you see trading, how you see regulation, and of course, many years that you've been in the market and seen all these moments of volatility. What do you think is something that people misunderstand about risk?
What is something that people misunderstand about risk? All right. I think that every crisis is different. And if you do your risk analysis based on the last crisis, you're going to mismodel next crisis. And, the commonly used risk approaches is to do exactly that. You look at
what happened.
Look at what happened for the last 5 years. And, like right now, the Russian invasion of Ukraine is just moving out of the 5-year window in the VAR models.
Yeah.
And so you see this sudden adjustment in
interesting
in the VAR model, and how much risk there is, and it just kind of highlights how silly these models are, because it's very arbitrary.
Yeah. So if you keep looking backwards, there's no really way of telling the future, right?
It's very, very hard. Very hard.
So what's the best way of positioning yourself as, someone who's trying to be a trader, someone, like you 20 plus years ago, trying to build your own firm? If you can look at the past, what should you look at?
I think you just have to do the scenario analysis and be open-minded. That's the biggest thing, is have a good imagination about what could happen.
Okay. What does that mean?
Just there can be bigger moves than people think. And people are kind of lulled into a false sense of complacency, so that they miss big risks, and all of a sudden they blow up on something, because in risk that they could have covered really cheaply
Hmm.
because they just weren't open-minded enough.
So how do you do that in practice? Just, buying instruments to hedge your investment because they're cheap and hoping for the worst. Like, how do you, is that
Yeah, I
another
mean,
that
it's
is?
just a matter of like, running risk scenarios that are relatively wide and considering buying out of the money options to cover the tails.
Hmm. Someone really smart who I worked with, who was a risk analyst for this institution, and he said that risk for him was allowing people to make as much money as possible as long as they don't go completely bust. And it was pretty interesting because I thought it was the opposite. I thought it was risk was a leash for people to not to take too much, not to aspire so much return. Which vision do you take more? Is it?
No, I mean, I think that's right. You want people to take risk and to express views
Mhm.
and then you have to think about uh, how to not blow up. I mean, especially if you're talking about like equity risk, equities generally go up,
Yeah.
right? So you want to be long as many equities as you can,
Yeah.
except that sometimes they go down.
Mhm.
And so you have to kind of, be prudent about, hey, if equities go down a bunch, am I going to have to, am I going to get stopped out of my position? Am I too levered? And that's, I think, that art/science of weighing those two things.
Mhm. And how does one train this art/science of doing things?
Um,
Just
yeah,
just
it's
practice.
some combination of common sense, intuition, and math.
Mhm. It's fair enough. And is that something you look for in when bringing people to your organization? Is that something when building teams that how do you see that happening in
I mean,
practice?
when you hire somebody out of college, they generally hadn't had exposure to that, right?
Mm,
So that's stuff that they'd need to learn on the job, and it's more a matter of hiring people who are really smart, hardworking, and as I said, are kind of AI native. We are very comfortable like leveraging the latest tools to solve problems.
mhm,
And then when you have somebody like that, you can teach them how to think about this.
mm. So it is a true mixture of art and math.
Yeah.
You have to have a liberal arts way of seeing things and then a mathematical way of quantifying how bad it could go wrong. Basically.
Yeah.
Interesting. And we talked a little bit about how DRW evolved over the last few decades, and something that caught my eye was that uh, you guys went out of the market making and trading business. I mean, not went out, you expanded it beyond that into global investments, the DRW Global Investments, which is a more long-term value approach to investing, and the venture side. So, and something I was asking myself was like, you basically have a money printing machine in the algo trading and the market making side of the business. What was your thinking process in going into these new ventures?
Well, I mean, one of the things, if you're the trading business now is basically a technology business.
Mm,
So you get a lot of insights about technology companies. And
mm,
often there are opportunities to invest in new companies that are technology companies or new markets companies where you can really partner with them and help them grow.
mm,
And that becomes a win-win in terms of being able to generate really attractive returns on capital on the venture side, and then also sometimes it leads to opportunities on the trading side.
mm.
So I just kind
So for you, it was like
do that.
it seemed like a complementary thing to do.
Yeah.
Oh, interesting. What about the long term, the your WGI part of the business? What was the thought process
I
behind
mean,
that?
I'm not actually sure which part you're. We have hundreds of entities, but we have. Uh, I mean, we have various time scales that we trade in.
Mm,
Some are very short, some are kind of more mid frequency, and some longer.
mhm,
And so it just winds up defining different risk holding periods.
mhm. And do you think there's a certain type of return or a certain type of exposure you can only get by having this long term exposure to an
Well,
asset?
I mean, sometimes with the very short dated algo stuff, like you can only trade so much.
Yeah,
I mean,
not really exposed.
it's not, you can't say, okay, this is making money, now trade it 10 times as big. It just doesn't work. So you're kind of capacity constrained, and then you need to go out the risk curve.
So it wasn't really, of course, for the venture side, it was this ability to couple your tech expertise with rising startups opportunities. But for the other entities, it was more of a wave. You kind of ran out of things to do with that bottle of cash, so you thought there was other things to explore. That was basically the idea.
Yeah, and like, in 2009, we went into the real estate business. Well, in 2008, we made a lot of money in the crash and everything.
Yeah.
And so we had excess capital. There was a bunch of really distressed real estate, and we put a team together and did really well. Buying distressed real estate and repositioning it.
And how easy it is to make traders who are focused on algo to go do real estate, or just hire a completely new team?
The person who did that was more of an investment person.
Okay.
Yeah.
So it's a completely new bunch of people to that.
Yeah.
Okay. Yeah. And why do you think DRW was able to succeed in all these different types of business, from market making to algo trading to crypto to venture? Like, what do you think is the underlying value?
I think the underlying thing is just being very thoughtful about risk, risk and reward. And there's a common theme. I mean, in 2009, 2010, when all these buildings were in default, we bought like a bunch of buildings on Oak Street and Rush Street and some of the best real estate in Chicago.
Really?
And
for pennies on the dollar.
Yeah. And my thesis was, okay, well, I think that interest rates are going to stay low for longer. So that means cap rates will compress. In other words, the yield on the real estate.
Yeah.
And I think that rents will bounce back. And I was right. And the upside downside risk analysis there was very compelling.
So the market was just overreacting. We saw an opportunity, bundled the team, went right ahead.
Yeah.
Sounds awesome. And do you think there's something someone, for example, from the venture capital team could learn from a trader, or some of the trader could learn something from the venture capital team? Do you think what's something that a person that is a very algo type person can learn from an investor, or vice versa?
Yeah, I mean, often that's more like collaboration around a project. Like, hey, we're going to invest in a new exchange. We're going to provide owner of the big liquidity to it, and here's the investment thesis and whatever. So that kind of collaboration could take place. But we do also think about I mean kind of different ways of thinking about risk and return, ancillary to the venture business.
Yeah. And again, you've been running your firm for more than 2 decades now, more than 3 decades now, right? And what's something that you thought you knew about the market but was completely wrong, and it took you 20 plus years to learn?
One of my favorite sayings is the Mark Twain saying. It's it's not the thing that gets you in trouble is not what you don't know. It's what you think is but just ain't so. Something like that.
It's what you think you know but you don't.
Yeah.
Interesting.
That you're just wrong about. You have high conviction, but you're just wrong. It's much more dangerous than
just admitting that you don't know.
Than just not knowing. And I mean, listen, I don't know that there is a macro theme like that. I mean, sometimes, I have a thesis. I mean, last year I thought Bitcoin was going to go up a lot. It seemed like all the tailwinds were there. That was wrong. It was pretty sideways, down slightly.
Yeah.
Massive underperformance of gold. And so it's more of that kind of thing.
And what do you make of the AI bubble that everyone's talking about? It seems like for a few months everyone's warning, there's AI is gonna crash and all the AI stocks are super overvalued, but these things don't stop to go up.
Yeah.
Uh, how do you see this? How do you see this going on for the next few months?
Listen, I mean, these tools are becoming more useful at a shockingly rapid rate. We were just talking about the new Anthropic model that just came out,
Claude?
5.
I love Claude.
Uh,
I switched from ChatGPT to Claude a few weeks ago. Pretty happy with it. Yeah.
and I mean, just the productivity gains that you get from leveraging that are incredible.
Uh,
So, is it a bubble? I don't know. Anytime that there's a new technology that has a lot of promise, there's some bubble aspect.
mhm.
I'm sure that some of the investment in some of the data centers is going to be horribly wrong.
Yeah.
But some of these things will make a ton of money. So
Yeah. And uh, and for a young person just right out of college, uh, a lot of people are saying that it's going to be hard to find jobs in a few years. But I feel the opposite. I feel that if you just dig your head deep and really know how to use these tools in your favor, you're going to be miles ahead of the competition that don't. How do you see people implementing those things in your life, like in their personal, professional
I mean,
lives?
100%. So that's exactly right.
Mhm.
The people who really embrace these tools really lean in and figure out how to leverage them to do all sorts of things, to code, to build new, to solve problems, to build businesses. They're going to have such a huge advantage
Hmm.
uh, over people who are like, oh, I don't know,
I'm scared of this. I don't know how to
yeah,
use
I don't
it.
know how to use it.
Yeah.
Those people are, yes, they're going to have a hard time putting a job.
Yeah. What about in the academic setting? Because, I'm in Chicago, you're Chicago Law. And it's interesting because every professor has a different approach to it. A few are like, hey, don't ever use it. I want you to think for yourself in this class, which I appreciate. That's, why we're in Chicago for. And then professors are like, hey, this is how you use it. I want you to cite your sources as AI. It's no problem. Just cite it. How do you think, teaching people about using AI and allowing people to grow in this environment where they're going to be able to implement those in their professional life? How do you think that's gonna happen?
Yeah. So I have a strong bias towards, I think the right answer is to encourage students to use these tools
Mhm.
because they're available. And as we just agreed,
Yeah.
being able to leverage these tools is a super important skill. So if your teacher says don't ever touch the tool, then how is that helping you unless these very powerful
For the
tools?
class, I mean, of course.
I understand, but it does mean that teachers have to reconfigure the way that they teach their tests, et cetera, to ensure that the students are thinking and learning how to think.
Mhm.
And I do think that you have to, ideally they approach things from first principles and rethink how students need to learn in this new world.
Mhm. And does that change the way you think about your employees? Because, for example, one thing you said was really important was being able to do math on the spot. For example, is that something that's really important nowadays?
Listen,
Or
I mean, being able to do math in your head is kind of an indication of a high IQ,
of course, yeah.
and so that's not a bad thing.
Uh-huh.
Um, uh, I mean, obviously, being able to leverage these tools is even more important. But yeah, I mean, it's the same. It's not quite the same importance. But I mean, I think if you're going to be sitting there taking risk, having an intuitive grasp of numbers
Hmm.
is pretty important.
Yeah. And on this topic of, young professionals or students starting their careers, what do you think is something that uh, young people get wrong about starting their careers? Because of course, you left your Chicago, you worked for a training firm for a few years, then you left it, started your own thing. Uh, and a lot of my peers are just, hey, I'm gonna work in a finance career for 10, 15 plus years, and then I'll figure out from there. What do you think is something that people are getting wrong?
So, I mean, let's see. I think in this world, uh, it's much easier to do a startup than ever before, right?
Mhm.
So there's nothing wrong with trying to do that. And maybe it'll work, maybe it won't. But somebody who's super motivated uh, and has high conviction about an idea There's nothing wrong with going down that path. Um, Obviously, working for, if you come and work at DRW, we've got so many tools, so much data. Like, it's a great environment to learn and ultimately, you know, become very, very successful. So it's not a bad pack either.
Yeah. And something that's really really interesting to me is always thinking, you're someone that built your own career from scratch. You did it all by yourself. Not by yourself, but you made it your way. Did you have any mentors along the way? What did they teach you that was really important?
Um, I mean, I was, um, the training firm that I started off with had some philosophy about risk. So I learned some things there, but I was pretty much on my own. Me. I mean, you know, even when I started working for the company, like, I would go home and write my own, option pricing models and ball surface models, and so I was figuring all that stuff out on my own.
So if you figured out on your own, what was the best thing you learned that in this whole process? The most important one.
I mean, I think it's just that persistence and focus pays off. You have to iterate,
Yeah.
and if something goes wrong, I mean, one of the things I always say is, if something goes wrong, you have a drawdown. Well, that's, you need to learn so much from the drawdown that that money you lost was worth it. But I'm sure that you get a return on your tuition. And throughout time, we had, several instances like that where, like this one time we were, I don't know, I think this is early 2000s. There was a big shift in the skew and the Eurodollar options. And, we lost tremendous amounts of money. Every day we would lose money. And the whole trading pit was losing money every day. And so I brought the quants in for the weekend and kind of devised a new, some new risk parameters, some new,
Just brought on you wanting to say, hey, listen, fucked up. This is what we should learn.
And on Monday morning, I had like this additional metric added into the pricing sheets.
That's amazing.
Explained to everybody how it worked, and the skew at that point was so volatile that we were able to manage that incremental risk, part of the risk, better than anybody else. So we made all the money back, in a couple of weeks.
That's amazing. So just bringing everyone together and figuring out what went wrong, and figuring out a tool to make it right. Yeah. So just trying things over and over again. So that's amazing. And we're running out of time here. I don't want to take too much of your time, but something I was wondering too. You're obviously extremely successful. As I said, you made it. You made it your way. What keeps you going? What what makes you want to work every day still? Because you could just go off to retire or do something else fun. Like what makes you go to work every day?
Yeah, I mean, listen, it's the intellectual challenge of doing this stuff. I mean, I really enjoy solving interesting problems, working with smart people, and thinking about the new thing.
So it's still the same passion that started it all. Just trying to learn new things and find great tools to beat the market. Test if you're right or wrong. It's just the same curiosity still alive.
Yeah, and now we're kind of expanding that, right? By starting new companies.
Yeah,
like working on the Canton network. It's a super interesting project.
Yeah.
So that's kind of an expansion beyond just see if you make money in the market or not.
Yeah. Well, new segments, new challenges. It's all the same thing, but in different ways, I guess.
Yeah.
Well, Don, this has been awesome. Thank you for coming. I'm sure the audience got a lot of interesting takeaways. So appreciate you taking the time. Thank you for coming over.
Yeah, really nice talking to you.
All right. Awesome.